Hello and welcome back to Explain the Charts, your go-to channel for detailed market analysis. Today is November 17th, 2025, and we are taking a close look at the Australian dollar versus the US dollar, or AUDUSD. There's a lot of cautious sentiment in the market right now, so let's first break down the news that's driving the price. Currently, the AUDUSD pair is slipping, primarily because the US dollar is regaining momentum across the board. This strength is fueled by fading expectations of a Federal Reserve rate cut anytime soon, which makes holding US dollars more attractive. Looking ahead, we have some potentially market-moving events on the calendar. Traders are keenly awaiting the release of the Reserve Bank of Australia's minutes and upcoming Australian wage figures. Furthermore, statements from Federal Reserve officials, including Neil Kashkari and Christopher Waller, will be scrutinized for any hints on future monetary policy. It's worth noting that just 5 days ago, the Aussie got a significant boost from robust domestic jobs data, pushing the pair above the 0.6550 mark. However, that bullish momentum has stalled, with the renewed USD strength putting the pair in a tight range as traders await the next catalyst. Now let's translate this news into what we're seeing on the charts, starting with the big picture on the daily time frame. Looking back over the past year and a half, we can clearly see a significant downtrend that began in late September 2024 from a peak near 0.6937. The price experienced a dramatic fall through October and saw another sharp leg down in early December 2024, eventually bottoming out around the 0.6190 level. Since that low point, the price action has been a story of recovery and consolidation, fighting its way back up. However, this recovery has faced a formidable ceiling of resistance in the 0.6500 to 0.6550 area, which has been tested multiple times without a sustained breakout. On the downside, we've established a key long-term support zone around 0.6200, with more recent support forming near the 0.6400 psychological level. Let's zoom in on the more recent price action, filtering our daily chart from September of this year. We can see a strong rally in September that pushed the price up to test resistance near 0.6688. That rally was decisively rejected, leading to a sharp sell-off in early October that brought the price all the way down to a low of 0.6466. Since that October low, the price has been grinding higher, forming a series of higher lows, which is a constructive sign for the bulls. Now, looking at November, we can see how the news events we discussed have directly impacted the price. The strong Australian jobs data around November 12th correlated perfectly with this spike up to a recent high of 0.6580. But as the narrative shifted back to US dollar strength and fading Fed cut bets, the price reversed sharply from that high. This has created a short-term bearish structure of lower highs and lower lows over the past few days. To get a better feel for the immediate trend, let's switch over to the 1-hour chart. Here we can clearly see the peak at 0.6580 last week and the subsequent downtrend that has unfolded. The price has been consistently making lower highs and lower lows, which defines this current bearish pressure. An important level to watch here is 0.6550. This area was previously a support during the climb up and has now flipped to become immediate resistance. On the downside, we are seeing some buyers step in around the 0.6520 to 0.6525 zone, which is acting as immediate short-term support. The price action here is very compressed, confirming the reports of the market being cautious and range-bound as it awaits new information. Drilling down even further to the 15-minute chart gives us a microscopic view of today's price action. As you can see, the pair has been oscillating in an extremely tight range, largely between 0.6530 and 0.6540 for many hours. This lack of direction and low volume is classic price action for a market that is holding its breath. Traders are clearly hesitant to commit to any significant positions ahead of the high-impact news events we are expecting this week. A breakout from this narrow consolidation on the lower timeframes will likely be our first clue as to the market's next intended direction. So let's pull back to the daily chart and recap what this all means for potential trade setups. The key levels to watch are clear. Immediate resistance is at 0.6550, followed by the recent high of 0.6580. A break above that level would target the more significant resistance at 0.6600. To the downside, immediate support lies around the 0.6500 psychological level. If that breaks, the next major support to watch is the October low around 0.6465, and below that, the 0.6400 area. So, what are the potential scenarios? The short-term bearish case seems more probable, let's say a 60% chance, given the current USD strength. If hawkish Fed speak materializes and price breaks below 0.6500, a move down to test 0.6465 is very likely. For a bullish case, which I'd place at a 40% probability, we would need to see a catalyst like surprisingly dovish Fed comments or very strong Australian data. A confirmed break and hold above the 0.6550 resistance level would be the first signal, with a move above 0.6580 confirming bullish momentum towards 0.6600. Long term, the picture remains mixed. The pair is still in a wide range, and a break above 0.6700 or below 0.6400 would be needed to signal a new major trend. Keep a close eye on the headlines this week, especially concerning the RBA and the Fed, as they will undoubtedly be the primary drivers of price. That wraps up our analysis for AUDUSD today. Thank you for watching Explain the Charts. Please remember, this content is for informational purposes only and should not be considered financial advice. Trading involves significant risk, and you should always conduct your own research and analysis before making any investment decisions. Good luck with your trades, and we'll see you in the next video.